Welcome to the ENFRA show. I am Professor IYER, today with you on the ENFRAtv. And before we go, today we are going to take you around to the entire economy of India as well as the global economy situation. In brief, we will also take into segment 2 on the energy and power sector in the country. And on the segment 3, we will go towards the infrastructure sector. So starting with this first segment, let me take you with the current status of the Indian economy. With a few snippets, India's forex reserves hit a low of 280 billion US dollars. In fact, India's forex reserves must have been, with a 7% growth rate, if India had really achieved, India would have seen the level of the forex reserves at 350 to 400 billion US dollars. At this point of time, our entire GDP growth rate has hit a very low level of 4.8% growth, and today the size of the Indian economy at 1.78 trillion is seeing that type of a growth rate. So we are at the worst situation. And my friends, as I go along with this news today, is really not very good news, because the Indian rupee has now hit a parity of 65.5 to the US dollars. And if you look at that with the euro, today we have crossed and pressed the mark of 85 rupees to the euro. So that is the weakest that we have ever seen, the rupee, and it's constantly weakening on almost a daily basis. So what is it for the Indian economy with the weakened rupee? So there are a lot of professors of doom around who have said that a weak rupee would actually give the Indian economy a worse situation with inflation, which will definitely be seen rising in the next few days or the next few weeks. We'll see inflation further going up on the Indian economy. But I would say, while there are a lot of negatives here, there are also some pluses. For example, exports from India are going to look very competitive when the rupee goes down. And second, the tourism industry in India would, and the hospitality trade in India would see a definite jump, because at this point they were struggling and their room rates and rack rates would be lower with a weakened rupee to the dollar, as you have to pay less in dollar terms to book Indian hotel rooms. So there are always, every time there is a negative, there are always certain pluses that are there. And another thing is, India's solar photovoltaic industry can always look up, because export of photovoltaics from India, again with an industry which is struggling with no more projects coming up, because the currently in India is about 1.5 gigawatt of solar installations, which is not sufficient, because we should have by this time crossed across the national mission about 2 to 3 gigawatt. But suddenly there is a slowdown, and this may look a very attractive scene, because with the German market and the European market opening up, the export of solar PV systems to other markets could actually be on a positive trend with a weakened rupee. So while rupee weakens, which in the long run we do not allow the rupee to slide off, we need to take some economic steps, not cosmetic measures, economic steps to strengthen the rupee. But the temporary weakening, or I would say the downgrading of the rupee, is maybe a blessing in disguise for some of the key sectors of the Indian economy. So we have both the plus and minus in a rupee weakening situation. It's not all hunky-dory, it's not all bad to see a correction in the rupee. Yes, but I think in the long run we need to stall, we need to actually see and take very strong measures to make the Indian economy intrinsically strong, for which there are several steps that the government can take. But before we go to those steps, let me also give you a little take on how this crisis of the rupee came on. You know, what was the main reason that drove this crisis? In fact, it was not purely a market-driven mechanism or an inflation-driven situation. So across this take, which is powered by the MARKENOMY journal today, our analysis at the MARKENOMY journal is very interesting. We feel that the core sectors of the Indian economy, when they plummeted, and this includes basically the energy and the power infrastructure, and also the entire infrastructure sector, which has been in doldrums for the last 5 years, and that is too long a time not to function. It's almost like we did nothing in this plan period, and especially the 11th plan period, we did nothing before the onset of the 12th plan to bring the power sector up, to bring India's infrastructure sector up. And this was the fundamental reason that from a level of a 9% growth rate, we have literally slid to a below 5% growth rate of the Indian economy. And that is the key reason that India has not done anything. And I would also say, if you look at some key sectors of the Indian economy, like the mass housing sector, we are today in a scene where the economic housing for an average Indian is not at all visible or feasible, and we are only seeing the urban properties which are constantly escalated in costs being made available, and also the bank loans are not easy to come, and they are at a very high interest rates. Today the housing loans are at close to 12 to 13% interest rates. Now these are not conducive situations, because the housing sector in fact impacts the other sectors of the Indian economy. For example, the cement sector, the steel sector, the sector which is sanitary sector, the granite sector, the entire building material sector. So you are going to impact a lot of sector, and including the consumption of the energy sector, because when housing sector grows, the other parts of the economy also see a growth, and industrial growth also will go up when this happens. And so when we see a complete downfall or a 60% fall in the growth of buying of housing from people and growth of the housing sector, what we exactly see is a direct hit on the Indian economy, and its key sector like steel, cement and infrastructure and other sectors also start suffering parallelly. So this is a story of too many mistakes by this UPA regime or the UPA government. The UPA too has made blunders and not only mistakes. So the 9 years or 10 years of Dr. Manmohan Singh are under duress now, because it seems that the best economist, or the so-called labeled best economist of India, faltered at the best, probably the best time of the Indian economy. It was a performance which I tell you cannot be pardoned, because this was in fact instead of performance a non-performing situation for the Indian government. We did nothing to put the Indian economy on track in the last 5 years in specific, and in the total 10 years it will be questioned. The policies of the UPA government would be under tremendous question, because the main reason has been a lack of inaction, mired in controversies, completely in corruption. It's completely a bad situation for the Indian economy, because the economy and polity floundered in totality. On paper, the best, I would say, man for the job, for the Prime Minister's job, was Dr. Manmohan Singh. And so he has to take the entire blame for finally seeing the country going down. So with that, I would like to take you with certain situations that in this kind of a situation of the Indian economy, are we seeing some good scenes? So I would say, my friend, the good news for you is that today Raghuram Rajan has taken over as the RBI governor. 6th of August, Raghuram Rajan was announced as the new RBI governor for India, and Raghuram Rajan is the same man who in fact predicted in 2005, 3 years ahead of the collapse of the US economy and the global economy. He was the only man in the world who predicted the collapse, and definitely we have the best man at the helm of the job at the RBI. And all this comes in the wake of the mistakes that the Apex Bank of India did, India's own answer to Fed, the Reserve Bank of India did under Duvuri Subbarao's regime. Dr. Duvuri Subbarao will be remembered best for inactivity, for squeezing the credits, and for reducing the liquidity in the Indian market. And I would say, as much as we can blame Dr. Manmohan Singh, his choice of Duvuri Subbarao became a betonore, and Mr. Rao was completely responsible for the economic mess that we have seen in his 2 years period of extension. His period with the Reserve Bank of India ended 2 years back, and that extension, which came from the Prime Minister's office, the PMO was responsible for giving the 2 years extension to Dr. Subbarao, further aggravated the crisis in the Indian economy. And I would say in the last 6 months specifically, Dr. Subbarao's actions were under scrutiny, and he probably did the worst, because instead of giving liquidity to the Indian economy, instead of bringing policies that attracted foreign direct investment, instead of ensuring that RBI gave the direction to Indian banks and also ensured that Indian banks made more money available to both the businessmen and the public of India, we saw a fantastic and never seen before credit squeeze that further harmed the Indian economy and sent it pummeling. And in fact, the rupee crisis is linked to that, my friends. So you must be seeing all these things are not being being reported in the Indian media, and we at ENFRAtv and across this ENFRA show are now first time bringing certain issues which are not in the ambit of the public domain. That it was a harakiri of sorts created by the combination of the Dr. Manmohan Singh led UPA regime and with the Reserve Bank of India led by a conservationist of the worst kind in Dr. Duviri Subbarao, that we have seen the Indian economy going down the way it has. In fact, fundamentally the Indian economy is not bad, my friends. I would say the basic economy is very strong. It just needs a few steps. So what are those steps? So what is the way out? So is there a way out? Can we talk about a way out for the Indian economy? So I can give you a 5-pointer across today for the way out. What are the way out? Number one is increased liquidity across an RBI driven credit construct policy. So I think Dr. Raghuram Rajan has too much in his hand. He does not have a magic wand to change things overnight, but he can begin with liquidity availability. The first signs are already through, because I think he's already influencing the man going out that more credit and liquidity must be made available. So these signs have already come out of the Reserve Bank of India in the last 2 days or 3 days. The next thing is most important thing is open the external commercial borrowings norms. ECBs for the power, infrastructure and core sector of the economy must be eased, so that this is the lowest level of interest rates in the world, and at this time if Indian corporates and Indian top business houses are able to raise capital through the borrowing route as well, that is borrowing for projects directly across the external commercial borrowing route, it will be the best time the Indian economy can fund itself. The public-private partnership which the Planning Commission is talking about can actually grow directly if you allow ECB, ease the ECB norms and allow corporates in India to borrow from overseas markets at low rates, because hedging of the currency today will be at the best situation, because you can do the best in a situation. Of course, there is a little danger with the continuous falling rupee, but I think these are all linked steps. The moment you open the ECB, the falling of the rupee will immediately be curtailed. One of the instant curtailing effect will happen through that process as dollars flowing into the Indian economy. The other side is easing FDI norms. The foreign direct investment for the core sectors, again the energy, power and infrastructure sector, must be made attractive for FDI, and for which we should work in tandem. The Ministry of Environment, the other ministries responsible for clearance, and the one window mechanism must immediately be built. The government must give two messages: opening FDI and quick clearances and one windows. So the next 1 year will see major infrastructure and power sector movement. If this happens, the Indian economy will be back on track in the next 6 or 8 months. The third point is the most important, as I told you, opening of FDIs and ECBs were there. And another thing, as I already told you some time back, is the mass housing schemes. Low interest in mass housing. I would say for homes less than 15 lakhs, the government must provide lower interest rates in the housing loans. And these housing loans for houses in urban side below 25 lakhs and in rural side below 15 lakhs must get interest rates in the region of maybe 7 to 9%. So that will be very interesting. So with this we can correct the Indian economy. So I would say while going that the correction of the Indian economy goes through this, and before we end this segment, I would also come back in the next segment. Before we open the energy game, I would take a small take on the global economy. With this, don't go back. We're coming back with a short break to you right away on ENFRAtv, on the ENFRA show. This is Professor Iyer coming back to you shortly. Professor Iyer. Welcome back to the ENFRA show. This is segment 2, where we are going to take you to the energy sector. Before we take you to the energy sector, powered by the ENERTIA journal, we would like to brief you on the global economy take today. In the global economic situation, China, other than India, is seeing a cash crunch, and the entire reduction in its credit capability is roughly $125 billion. That is the size of the Vietnamese economy. So it is not only India suffering. We are seeing a credit squeeze in the Chinese market. That is a very big hole that can pick up a very big hole into the pocket of the Chinese economy and the Chinese people. So very much like India. So India is not suffering alone. Let me tell you that our biggest neighbor, China, is in a big trouble with that kind of a credit squeeze. And this is a global situation. Of course, the good point, a little bit of a better point for them, is the growth rate of the Chinese economy. It is at 7.5%. So while a growth rate is there, the Chinese economy is seeing a credit squeeze. So the credit squeeze situation is not devoid of growth rates or no growth rates. So even a good growing economy like China with a reasonably good growth rate of 7.5% is seeing a massive credit squeeze of 122 billion. So questions must ask why credit squeeze is coming. And we see the Indian situation is far better because we have a floating rupee. We are definitely partially convertible to the world market, and if you see the yuan and the Chinese renminbi, it is not at all convertible, it is a fixed currency. So China is definitely in an artificial swing, and its economy can pummel even worse than India. So the Indian situation, let me tell you friends, is better than the Chinese situation. Other than that, there is a cheer. Tata becomes in the Interbrand rating of led by Jeff Frampton's company Interbrands. Tata has been put up as one of the top 10 global brands, and it is the #1 Indian brand. It is in the top 10 and the #1 global Indian brand. That's good sign for you. And the brand valuation is $10.9 billion. And the second number Indian brand in that whole valuation, not in the top 10, but number two Indian brand is the Reliance Group at $6.25 billion. I'm talking of the Mukesh Ambani Group, $6.24 billion. And at number 3 is $6.22 billion Airtel. So 3 Indian companies on that. But Tata really the winner. And interesting thing is the Interbrand CEO, Jeff Frampton, his top tea, the tea he takes in the morning is Tetley, again a Tata brand. Interesting take for you guys. Indian businessmen are not doing badly, they're doing very well. And at the top is Tata Group. Kudos to Tata Group. Definitely India's most credible and most best brand of the country. At number 2, another situation and good sign for you is that there is a revival in the Eurozone. In the last quarter, Eurozone grew at 0.3% in its GDP. The Eurozone comprising 17 countries which have supported the Euro currency, they are growing at 0.3%. Not a very big, really not a fragile growth rate, but definitely a positive growth rate. Clear signs of revival after a very long, I would say, downturn that Europe faced. And leading that charge is Germany at 0.7% GDP growth rate in this quarter over the previous quarter, and France at 0.5% follows suit in the GDP growth. So, and what I hear from my friends in Germany, I can tell you, Germany is rocking, my friends. They're coming back in a big way. They're doing more solar, my friends, unlike what you must be thinking. They're doing everything which is good for both the German economy, the European economy, the global economy. Keep watching Germany. That's the country to watch other than US in the revival period. With this, I move to the energy sector. News for you people. The good news for you is government seems to go serious. And I start with solar. As we see, the leader in the solar sector was Gujarat. Gujarat, with almost close to 1 gigawatt of solar installations, is leading the Indian solar charge. The entire country is at 1.5 gigawatt. And this entire 1.5 gigawatt has come from a complete zero state 2 years back. So we see that there is some impact of the solar growth. And all this is when they put up the National Solar Mission at 20 gigawatt. But you will remember that ENERTIA journal powered the first public-private white paper, which was released in April in Gujarat, at the backdrop of the India Power and Energy Conclave, which was done by the ENERTIA Foundation and the Renewable Energy Promotion Association. So then we said that we need to go to 40 to 50 gigawatt of solar by 2022, which was our take in 2009, when then Ambassador Shyam Saran came to the ENERTIA show called, which was a solar, ENPA solar show, the first ENPA solar show. We have in the meanwhile had about 4 of these ENPA solar shows, and we have strengthened the idea that India needs to build massively in solar, and 50 gigawatt per solar by 2022 is a reality. Oh, solar, big way. Now we are coming up in the month of September, on the 26th and 27th of September, with the Maha ENFRA conclave, and we will tell you very clearly that all of you must join us there, and we are going to further this pitch on more solar for the country. So as we go along, the correction scene for the entire power sector is if we embrace a lot of solar. So there are a lot of other parts of this, but before we go, let us catch a few of the developments in the power sector. One of the development is government's renewed ultra mega policy, and this ultra mega new pro policy, if it is implemented, it could be very dangerous, because India and India's power sector is not going to attract more of the IPP and MPP, merchant power plant investments, independent power plant investment, but we are going to see the large company as contractors, and again the government sector wants to drive the power sector, which is not feasible. The whole situation is very clear that we cannot do this, and we have to have a very different take on this whole issue. And before I go to all this take, I want to take a very short break with you before I brief you on what's happening to the power sector and what's happening to the entire Indian power and energy scenario. Don't go away. I come back after a short break. Welcome back, my friends, on the ENFRA show, across this short break on the ENFRAtv, your exclusive online digital television channel. Now, in this segment, I want to take you back to what I was talking about, which is the new power sector bidding norms. The new power sector bidding norm proposed, they almost completely deter the chance of any cheaper power for Indian consumers. And the key areas of I would say the key areas that could actually completely debilitate our power sector growth are as follows for the new suggestion. They say no ownership of plants in the power sector for the private power companies. Number 2, rigid technical and operational problems that come up. Number 3, financially, these are financially not bankable. Even the leading bankers like State Bank of India and the HDFCs, the ICICIs of the world and the IDFCs of the world are not very happy with the new power sector bidding norms. That's news I want to bring to you from this ENERTIA research for ENFRAtv, and for the ENFRA show. The other thing is there is a fuel price cap on the Coal India Limited notified prices. So this is another dangerous situation. You are playing in territories which are not to be controlled by you. And 5/5 and not the least is intrusive powers to independent engineers to investigate and look at these power projects progress. So these are very retrograde kind of steps that almost looks like the Indian government, especially led by the UPA, wants to just bell and crush the throat of Indian private sector investors. Now that's not a good sign for the country, because if you see, almost out of the 211 gigawatt of power that we have today, almost 62 gigawatt has come from the private sector, which is equal to the country's national power sector domain of 62 gigawatt. If you break that entire thing, 62 gigawatt comes from the central power sector and 62 gigawatt also comes from private sector companies. So that is the complete balance being achieved. And I would say the state sector contributes about 82 odd gigawatts. So that is the reality. So you cannot, throw your baby with the bathtub together out of the window, and that is what almost you're doing with these new power sector bidding norms. So ENERTIA take is a thumbs down for the new power sector bidding norm. We would say, be more aggressive, bring one window clearance, go forward and repair your power sector, see the projects are coming down, and don't let the fly-by-night operators in to damage your power sector growth. This is what our take is. Another very disturbing situation is definitely the Reliance KG-D6 issue, where Reliance has already come to a conclusion. Today they are producing only 14 mm standard cubic meter SCMD of gas. So that is much less than what they achieved in 2010, which is in the range of 62 mm SCMD of gas. So today we are seeing a complete drop in production, and what was promised, it was to be about 80 mm SCMD of gas. So that is, when you say mm SCMD, it is million metric standard cubic meters of gas, and that is what we had to achieve, and that was to be at the level of 80, and we are at the level of 14 from the KG-D6. So what is happening is Reliance is almost looking like withdrawing from the basin, and their investment, because they at 7.2 billion US dollars worth of investment, 21% stake was picked up by British Petroleum in the Reliance KG basin assets. But today almost 21 of their wells have been surrendered, and the stake is, it's very fishy, or I would say very, very intriguing, that why BP invested in a depleting asset. 2011 Reliance reported the depletion. 2010 the figures were at 60 million metric SCMD of gas. So if that depletion was reported immediately in 2011, it was known that there was a depleting asset. Why did BP invest in a depleting asset? So it's more than what meets the eye kind of scene that we feel that this must come out in front of the country. Because on the other side, British Petroleum is continuing its cooperation and bringing US gas to India with its collaboration with Reliance Industries Limited. So these are diametrically opposite things that are happening in the sector. On one side, they're withdrawing from the KG-D6. On the other side, they are increasing their cooperation with RIL. And that investment of 7.2 billion had almost 2.5 billion of goodwill money that came in. And this goodwill money did not go to India. It went to Reliance Industries Limited. So what was that goodwill money for? So I think BP and RIL must explain to the country why they are coming together. On the other side, they together are pummeling the KG-D6 capacity and talking about it. And there is no transparency in the terms that a third-party mediation and a third-party audit is not done on the KG-D6 asset. So unless all these things open up, there will always be question mark on what Reliance is doing with the KG-D6 gas. And this lack of this gas has ruined the entire gas economy and the gas sector in terms of the power production in India. Because we already see that in an election year, gas will not be seen as a priority for the power sector. Gas will continue to be a priority for the urea production and the, I would say, the fertilizer sector. And I don't think the petroleum minister will ever make any moves to make gas available to the power sector. That means de facto more than 20 gigawatt of gas-based projects in India will be continuing to lie idle or not producing. Major assets like Dabhol in Maharashtra and the Uran will not get any gas to produce power. In addition to that, I would say even the smaller projects, new projects of gas will not come up. Whatever the older projects are there, they are taking gas from the spot market, and that is what it is. And in this light, you should see the background of the petroleum ministry actually doubling the gas price in the country to $8.4 per SCMD versus the earlier one of $4.2. But I would say even that will not bring back, because we need to make gas available to the Indian market. And making gas available means you need to be very innovative. You need to go and review your deal with Iran and maybe go forward with deals with Iran, work on Kazakhstan, work on other gas resources, even bringing Canadian gas into India before the US shale gas hit the market. So if we look at a gas strategy, and maybe the key driver could be liquefied natural gas, LNG. We must remember that the current LNG terminal capacities of Petronet LNG and others are only 50% utilized. That is not good. So that utilization may go back to 100%. So with very interesting pricing, with an interesting model of making gas available, I think the LNG itself could drive the Indian market, and therein lies that solution for the gas crisis on the energy sector. Minus this, I would say India's hydropower sector is tottering. With the Uttarakhand tragedy, we recently did the India Power and Energy, India Power and Energy Conclave was at Surat in April, but we followed it up. The ENERTIA Foundation brought the 6th Hydrovision Conclave in Bhutan at Thimphu, which concluded on the 24th and 25th, and we wanted increased cooperation in Bhutan. The Bhutan power sector and the entire private sector was ready. In fact, there is no role of the private sector in Bhutan, and we have advised both the Bhutanese government and the Indian government. Across the show, we are further saying that joint venture and joint sector participation between Indian private sector and Bhutanese private sector across the PPP model, with which Montek Singh Ahluwalia, the Deputy Chairman and Planning Commission, has continuously been driving, must be expanded across the SAARC region. And in fact, we should encourage the private sector of Bhutan to, along with the Indian private sector, to do more development of the Bhutanese power sector, which is basically driven by the hydro sector. Tala is a great example, which is that 1000 megawatt plus project is actually feeding huge amount of power into India, and now the 10 gigawatt target for Bhutan must be achieved as quickly as possible and expanded to even 70 to 80 gigawatt for the future. But that's the type of potential cooperation between India and Bhutan, the more the merrier, because Bhutan's economy will be fueled by the purchase of power by India, and at the same time a huge amount of hydro cooperation in the region will also send positive signals for our own hydro states like Arunachal Pradesh, like Himachal Pradesh, like Uttarakhand, like Sikkim, that the hydro revival will be seen within our own country if we show that investment going across, and we see an economy of Bhutan doing very well by virtue of the purchase of hydropower from Bhutan by India. So it will also trigger off further growth for the Indian market. So kudos and thumbs up to hydropower cooperation between India and Bhutan. Also at the show, we talked about Bhutanese private sector also coming into solar. So we have recommended solar for one reason, that hydropower projects take a long gestation, and realization of I would say power onto the grid is something like 7 years in Bhutan. Almost like Tala and these projects have taken a long time, to come onto the grid. So if an average time period of 7 to 10 years is seen for hydropower to come on the grid, solar offers a great opportunity, because a 50 megawatt solar power plant can come in as short a time as 6 megawatt, and that means your flow of currency by virtue of sale proceeds of power into the project is very quick in the case of solar. And so even if solar is at 6 rupees 50 paisa, bundling solar with hydro is a great opportunity. We can use the Power Trading Corporation and other bundling agencies to actually bundle the power, including the energy exchange can directly purchase the power. So there is a very wonderful model existing which can be expanded across to Bhutan. So this model must also be used within India, as which I call as power pooling, and the nodal agency aspect for power pooling should be given to Power Trading Corporation, and the other large trading entities should also be encouraged to do power pooling. That means if your average tariff from depleted and older power stations is hovering around 2 rupees 50 paisa or 3, you can bundle the little costlier solar power at 6 rupees 50 paisa, which will come down to 550 in the next 2 years, and then you can provide this. And my viewers, I have good news for you. My formula is already adopted by Bombay's BEST, Bombay Electric and Suburban Transport, which runs the transport system of Mumbai. Is already bringing 20 megawatt of power into their system with a marginal increase for its consumers, and that 20 megawatt of solar will be on in the next 2 months. By the time we hit the ENFRA conclave of ENERTIA Foundation, we will see this development. So some good developments are there, and I would say that since we have very little time now in this segment for continuing our energy foray, in the next segment, in the next show, I promise you that we will discuss what I call that ENERTIA's open letters to the Prime Minister on status of India's power sector and the future recourse, which he gave in October-November to the Honorable Prime Minister, but no action has happened till now. Only we have got acknowledgements that they have this paper with them. But I will just tell you a few of the points that are there, a few bullet points. Next, we will discuss in detail, but few of the points. Nationwide, ENERTIA Journal and ENERTIA Foundation, along with Renewable Energy Promotion Association, have recommended following to the Prime Minister, the Honorable Prime Minister of India, Dr. Manmohan Singh, which we call as India's future power and energy sector strategy needs, and these are nationwide smart grid network critical for energy security of India. The Jawaharlal Nehru National Solar Mission must expand to 50 gigawatt by 2022, comparison to the meager current 20 gigawatt that will only bring 3% electricity to grid. We must expand to 7 to 10%. Why? Expanding to 50 gigawatt in the National Solar Mission. Promotion of solar rooftops and hybrids, solar wind in both urban and rural sector. The next point is, the fourth point is T&D losses target must come to 15% by 2017 for the entire country. We cannot falter on this. Adoption of national mission for enhanced energy efficiency in the power and energy sector as well as the industry. Bring back the share of hydropower to 35% in the national power generation mix. Next point is gas-based decentralized distributor and combined heat and power plant for urban sector, especially because the urban can use the combined heat and power mode to be more efficient. Biofuel-based decentralized distributed power generation using bovine waste for rural India. This must be also integrated with solar according to us. Bagasse-based and other biomass-based cogeneration captive power plant must get further encouragement, including low-interest loans. Coal-based ultra-mega and supercritical power plant with indigenous blended coal must be further promoted. We must continue our ultra-mega power policy with supercritical technology. And we know that recent report that ENERTIA has constantly taken position since the year 2008. We upped our pitch in 2011 that Chinese machines were not as good as BHL's machines, and our point of view is finally endorsed by CEA recently across that report. So that was the ENERTIA view, that was Professor Iyer's view, that was the take, and on this ENFRA show we say what we said for all these years has been proven true. There are a lot of other issues which we can come back on the power sector, but all of this we will discuss in detail with you. More of this ENERTIA letter to the PM will be discussed with you on this show in our next take and the next episode. Till then, I would say we'll come back to you. Don't go away. I have my last segment coming up on the infrastructure. Just in a few minutes, I'll be back with you on the ENFRA show with infrastructure. Don't go. Viewers to the ENFRA show on ENFRAtv, and in this third segment on the first episode here we are looking at the infrastructure sector of India. While I'll come back to and continue my point on infrastructure woes as well, that is infrastructure is tottering and it is bad shape. But before I come to that, let me give you very good news. HCC, one of the leading infrastructure companies in the country, has posted a first quarterly profit over the last 2 years. The construction company HCC reported 19.2 crores Indian rupee profit for the first quarter of the financial year 2014 versus rupees 30.9 crores loss in the corresponding quarter of the previous year. So that is a good sign that Indian infrastructure companies are on the revival path. And the second good news is that the private Adani Mundra port has crossed in terms of tonnage of I would say carriage or tonnage of cargo handling capacity. So the tonnage, in terms of tonnage and cargo handling capacity, the Adani Mundra port is now the top port of the country, ahead of Kandla. So this is a very good development. That means the private sector of India is doing well in the port infrastructure. So some good signs and some good news coming from the private sector, the domination in the infrastructure sector, in spite of a bad infra scenario. So what was that happened that actually crushed India's infrastructure sector? So key issues, as I told you, the housing sector was a key sector, that one of the key sectors that collapsed. But in addition to that, we have not seen major movement in the ENERTIA projects over the last 3 to 4 years. So that was a major failure, and this UPA government must answer why the level of road construction, which was at 14 to 15 kilometers per day during the Atal Bihari Vajpayee's NDA regime, why it came over the last 10 years, it come down to such a pathetic state that today we are only constructing about 2 to 3 kilometers of road per day. That cannot sustain the economy. We should be at 25 kilometers per day construction. So how do you revive this? We need to do tremendous work. It can be quick fixed, provided the government is serious about this issue. Government is completely inserious, and that shows, like for example, the most richest economy in the country is Maharashtra with $250 billion contribution to the Indian GDP. And of that, $120 billion comes from the Mumbai metropolitan region, my friends. And I must tell you that Mumbai metropolitan region is the worst infrastructure provided zone in the country. There are 40,000 plus potholes today in the Mumbai roads. Can you believe that? And what we are doing, we are putting paver blocks on the roads. We are going to cover it with paver blocks. It is, I don't know what I can call this, covering what. I do not want to say that because I want to avoid saying that on the channel. You know, covering it with what? Covering what? You know, so we can't imagine. Good quality tar and concrete roads is a must. Good construction is a must to drive your infrastructure. You must call the good contractors. You must have a certain standards. You must check and test what they have put, failing which you are not giving an infrastructure. Today, Mumbai metropolitan region's infrastructure road especially looks like a war-torn territory. It almost looks like an Afghanistan or Iraq. Are we building it without being bombarded? They look like after the rains having been bombarded heavily. Unfortunately, it is the nature's bombardment. But this nature's bombardment has been happening for several years now, and we have not been responding to it. It is very sorry state. In other way, I also put up Maharashtra back again for you on the infrastructure bank. Look at the 80,000 crores that we have spent on the irrigation infrastructure. Unbelievable. Everybody is talking about the scam, but nobody is talking about the fact that non-rain catchment areas are getting these large storage reservoirs. Unbelievable. Not an ounce of water will go into that. And all this is going to be what we call as, dilapidated construction. They will never come up, they will never happen. Anyway, they need not happen because it is lip service in the constituency of all these politicians that all of those dams will never ever get water in their system. And the water that is going in the Koyna dam is simply flowing into the Arabian Sea without any tapping, without creating, I would say, buffer reservoirs above the Koyna so that we can bring that water in the off-season times. We are allowing all that water to flow into the Arabian Sea. It gushes, it flows, it devastates Mumbai, it ruins our infrastructure, further it goes down into the Arabian Sea. It is fed for nobody. It is like water everywhere, not a drop to drink. Water everywhere, not a drop to use, my friends. That's the state of the infrastructure. The whole country's infrastructure is similar. For example, the entire flooding in Kosi in Bihar is simply because we do not have dams or we do not have storage mechanism. We continue to do that on West Bengal side as the Farakka barrage, and we open and whole Bangladesh goes below water. Anyway, we keep all the environmental activists go against dams. But look at Pakistan. It was flooded about a week back. And you can imagine, we are continuing to make our northern regions look like those worst regions like Pakistan. Can you believe Bihar's infrastructure is as bad as Pakistan's infrastructure? Kosi gets flooded, it floods the whole of Bihar, it floods the entire neighboring region of Nepal, and unbelievable. All of that can be trapped into water, reservoir as well as hydropower generation. Are our policy makers looking at this and trying to work towards that direction? And on the Punjab side, we see the whole of Fazilka and the bordering regions also under flood. So I think we need more of the Bhakra Nangals in the world. We also need to put more dams across Jammu and Kashmir if we want to stop our terrorism, because that has a double whammy. First of all, the terrorists will have to jump into a huge dam and they will never come into India. They'll be finished right there. And the border regions would have a fantastic infrastructure, and that infrastructure could actually bring more cooperation on hydropower between even India and Pakistan while stopping their terrorists. I tell you, hydropower into Jammu and Kashmir, like the Baglia, we need more projects. So hydropower, more infrastructure for the country. That is the way forward. More roads, more ports, more airports, my friend. And to fund all of this, we need specific objectives. We need to create special infrastructure funds, and that is the way forward. And with all this, I would say everything is not hunky-dory. The country can revert back. The model is clear. Develop your infrastructure, develop your energy, bring your economy back, obviously back to 7 to 9% growth rates. And all this can only happen if we have a political will. With that, I end this show. Keep watching the ENFRA show on ENFRAtv, your online digital channel for energy, infrastructure and power, and including the economy, my friends.